We are expecting a new FICO scoring system in 2019, and it may lead to a favorable boost in your credit score if you have been managing your money wisely and you're on top of your finance game. FICO is working on a strategy to create a more holistic scoring method. So up until now, what you've been scored on for a solid credit score is 30% of the amount owed, 10% new credit lines opened, 15% of credit history, 10% credit mix, and 35% payment history. Now, pretty much what this is saying, you need to have a large credit limit and a lengthy payment history in order to have a pretty solid credit score. So people in my position, let's say I never got educated on how to build a solid credit score from when I was young, which I didn't. I got my first credit card at 20 years old, and I'm not 21. But yeah, so a year ago, that's not a very good credit history on my credit report. So the FICO system that they're working on is meant to improve the credit scores for people in my position where I'm doing well on a cash, like on my cash statements, on my bank statements, I'm doing just fine. It's just I haven't had time to build a solid credit history. This new UltraFICO score is meant to broaden the amount of people that are eligible for taking out a loan. And it'll give a lot of young people a chance to start building their credit and start, their careers, their lives. I mean, it's a really important factor. The reason it's so important is because a credit score is sort of like your grade card, or like your report card when you're in school. It just shows your track record of how good you are with paying your payments on time and how good you are with your debt, with managing it. So in the business world, this is a very important thing that we all have to take into consideration. Even if you're not in the business, let's say you're not in the business world, it's for anybody out there. You want to have a good credit score. You don't want to be the person that's cutting up your credit cards and throwing them away and you're never gonna touch a credit card. You need a solid credit score to buy anything in this world. And all a high credit score means is that you're going to get a lower interest rate when you apply for a loan, and you're going to have a more likely chance of getting accepted or approved for that loan. Based off of this new metric, it is going to improve the majority of Americans' credit scores. People with like no credit history, like such as myself, like as I said earlier, like all that I have to do right now to improve my score with the traditional way is to wait and let time do its thing. But with this new scoring metric, I'm excited to see what happens. Pay close attention to this and watch it as it develops, and pay close attention to the data points that will be taken into consideration. They're going to look into how well you're managing your money. So they're going to look into your savings account, your checking account, and other money market accounts. Make sure everything is flowing smoothly and you'll probably get the most optimal result. Alright guys, so in today's video, I hope you guys got something of value. And what I'm going to stress again is that a credit score is very important. You want to make sure that you have a credit score, an open line of credit at some point. Don't be stupid with it. Manage it wisely. Make sure you're paying your payment in full every single month, and just be wise. I mean, it's something that you guys have to really take into consideration if you want to start buying real estate, if you guys want to start leveraging money. I'm sort of watching this very closely because right now I'm like super excited about credit. I like watching my credit score grow. So this will be a huge game changer for me, especially because right now, like I said, I don't have a very long credit history, and I just want to see how this affects my score, and I might be making more videos on this in the future. So if you guys enjoyed this, please leave a like, subscribe, and I will see you guys next time.